Today, I'll be talking about the stock market. What is the stock market, you may ask? Well, here's an introduction. Imagine owning a piece of the biggest companies like Apple, Nike, Tesla, making money as they grow. This is because of the stock market. The stock market is a place where people can buy and sell shares of companies to make more money and raise money. How are you going to invest in the stock market when you don't know the history of it? The stock market began in the 1600s in Amsterdam with the creation of the Dutch East India Company. This company was the first company to share its shares. By this time, companies needed large sums of money to fund ships, crews, and supplies, and doing long distance trading was very expensive. So, by selling shares to investors, companies could raise the money they needed while spreading the financial risk among many people. It would be a win win for both the investors and the companies. Now, this is what the stock market actually is. The stock market is a system where people buy and sell stocks, also known as shares. A stock is usually a small piece of ownership in a company. When someone buys a stock, they become a shareholder, which means they own a part of the company. And owning a small portion of the company, even though it's one share, it still represents ownership in the company. So companies can sell shares to investors to get funding for things like expanding their business, new products, or hiring more workers. People buy stocks because they want their money to grow over time, and many investors buy stocks to earn a profit by selling them later at a higher price. Others buy stocks to earn dividends or to save for long term goals like college or retirement. Now, let me tell you how the stock market actually works. By allowing people to buy and sell stocks through a clear process, the investor can open an account with a broker, which is a company that places trades for investors. The broker can then send that order to a stock exchange where it is matched up with someone who wants to buy or sell the stock. Once the trade is completed, the ownership of the stock is transferred to the buyer. Stock exchanges are organized marketplaces where trading takes place. The New York Stock Exchange, also known as the NYSE, is one of the oldest exchanges ever, and it can also trade with physical trading, called floor trading, or electronic trading, which is mostly known for. Also, NASDAQ is a fully e- electronic exchange, which is known for technical technical companies like um, Windows or Tesla. These exchanges make sure that trades are fair, prices are accurate, and companies follow rules that protect investors. Stock prices are also determined by supply and demand. When many people want to buy a stock and few want to sell, the price goes up. But when more people want to sell and few want to buy, the price goes down. Why people invest and starting early? People invest to build wealth, reach future goals like college or retirement, and gain financial freedom. Investing helps money grow over time through compound interest, which means you earn money on top of your money the longer it stays invested. In the US, you must be 18 or older to invest on your own, but teens can start earlier with a parental account managed by a parent or guardian. Starting early can be a huge advantage because time matters more than the amount of money that's in there. For example, someone who starts investing at 18 can end up with much more money than someone who starts at 30, even if they invest the same amount. Why people invest and the risk in investing. Risk in investing means that there's a chance that you could lose money, especially with high risk options like individual stocks, cryptocurrency, or meme stocks, which can go up fast or down really fast. To invest smartly, don't put in money you can afford to lose. Diversify your investments and think long term. Do your research and start to learn as you go. The key is to not avoid the risk completely, because if you do, then you won't make a big return due to there's no risk in it. Um, Even though there's no risk, you can still build safely. It's just going to take a lot longer. But to manage it wisely, but to manage your money wisely is to make it grow safely over time, in my opinion. In conclusion, the stock market is a powerful tool for growing wealth. It can be risky and safe at times, but it ultimately helps you reach your goals and gain financial freedom. It comes with risks that must be understood, and you also have to spend your time in learning about the stock market. But it helps you make smarter choices in the future. You can ask trusted adults or financial professionals for guidance and to make informed decisions before investing. Start early and be thoughtful with your money to make long-term success.